Hi, this is Eric with Canaccord Genuity Wealth Management and a part of Graham Wealth Partners. Today I'm going to be talking to business owners, and we're going to be talking to people who have got beyond that first stage, that startup stage, where now maybe you're feeling a little bit more comfortable, you've got customers, things are growing, and you want to figure out what to do within your business and growing your wealth. So today I'm going to focus on 8 specific points, and then we'll go from there. The first point of consideration is 2 very important financial documents. That would be your will and your buy-sell agreement. The will is something that everyone should have, and it really is the most important document that you can have. If you own a couch, you should have a will, and make sure you update it on a regular basis. Because I've talked to people who haven't had a will update in 5 years, 10 years, 15 years, even 30 years, and worst case is you don't even have a will. It's a legal agreement to help you dispose of your estate and to make sure that there's as little infighting as possible and your instructions are very clear. Same thing with the buy-sell agreement. If you are in partnership with anyone, you need to make sure that you have a buy-sell agreement just in case something happens to your partnership. And it could be partnership breakdown, it could be poor health, it could be any number of things. The second point is to evaluate your current business professionals. You probably have an accountant, a lawyer, an investment advisor, an insurance advisor. There's lots of people who can help you run your business and provide services to you. You just need to make sure that they're up to date and that they have the capacity to help you with your current stage of business, but also to make sure that they are able to help you with your future business. As an example, if you started with your friend who's a lawyer at the beginning of your business and he does a little bit of corporate work, a little bit of real estate, a little bit of wills and estates, and as you've grown, you need a specialist. You need to make sure that your professionals are able to provide the services that you need in your business at the moment. The third point you should consider is, does your corporate structure make sense? Again, that goes back to changing things as your business grows. Maybe when you started off, you were a sole proprietorship, but now it makes sense to have a corporation. Or maybe you need to add shareholders or take away shareholders. Or maybe you need a family trust. Or something that has changed in your business as you've grown. You need to make sure that your corporate structure is up to date. You need to talk to business professionals that are familiar with your business and can provide you the expertise and advice that you need for your current stage, and to make sure that you're ready to go for growing your business and not running into things that a little bit of advanced planning would be able to help you with. The fourth point to consider is, don't lose your money. Every business owner has a certain amount of risk, especially in the earlier stages of your business, but even as time goes on and you have a more established business, the economy can do things, there can be changes in laws and legislation and all kinds of things that can impact your business. So you have risk that you take every day that you step into your business. So it's prudent and it makes sense to have assets that are outside of your business, or cash or RSP money that has some ability to withstand whatever the market or whatever situations come up. So when you're looking at your business, you can take risk there for sure, but make sure that the majority of your portfolio outside is designed to weather those storms, so that you don't have to worry about whether or not your portfolio is going to blow up in your face and you're going to have nothing left when your business, if something should happen to your business, and something should happen to your investments as well. The worst case scenario is everything stops working all at once and you're left in a terrible position. So make sure that you have at least some of your assets in well-diversified, safe investments. The fifth point is to create a long-term financial plan. We hear that term thrown around a lot, and it can mean many things to different people, but for me, really, a financial plan is a decision-making tool. You can say, I want to retire at age 55 or 60 or 65. And then you can put in the information into that plan and figure out what would happen if I bought a vacation property in 5 years. What would happen if my kids stayed at home? What would happen if my I needed to support my parents. And so it allows you to make a decision now based on the information that you know now on different scenarios. Of course, we can't see into the future, and it needs to be regularly updated, but at least it gets you that roadmap for where you're going to go into the future, and it allows you to throw different scenarios in there to see what would happen and what that might look like. The sixth point is protect your family. And by that I mean make sure that your income is protected, make sure that your business interests are protected if you should run into health issues, or in the most drastic situation, if you were to pass away. Too many times I hear people and hear stories of entrepreneurs who haven't protected themselves in that way, and their families are left with a mess. Either they don't have a will, or the will isn't up to date, or maybe they could have used some life insurance or disability insurance, or something that could help the family in a difficult situation. You really run out of time when you go through that situation, so you need to be prepared in advance so that you're not worried about that as you go through it. The seventh point is, how are you being compensated? There are pros and cons to each of them. You can take dividends out of your company, you can take salary, you can do different things, the timing of it, and base it on your tax plan. And it really makes sense to talk to your tax planning professionals to think about what is the best thing for you to do. You also should bring in the financial planner and potentially the investment advisor, because it does also have an impact on your RSP contribution room, your Canada pension plan, and other aspects of it. So make sure that you're looking at all options and take care of the income so that it gets paid tax efficiently to you. The eighth point and final point is keep the end in sight. I know you're growing your business. I know it doesn't seem like retirement or exit is anytime soon, but make sure that you keep that in sight, because unexpected things can happen. It can be positive. It could be an unsolicited offer for someone to buy your business. It could be health issues. It could be change in life. Maybe you want to move to another country. It could be anything. So make sure that you're prepared for that, because it does take time to prepare your business for sale. Well, you might not need to prepare as if you're going to sell it tomorrow. At least have an idea of who's going to take over, of what the value of your business is, and prepare it so that you can make those changes if necessary. And one thing that also does is helps you prepare the business to be more profitable and to be more valuable. And that's really something that you should pay attention to along the whole journey of your business, because that's important to increase the value of your business over time. There's a lot to consider from your business as you grow it. You're busy building your business, you're busy doing things with taking care of your employees, and you want to make sure that everything else is taken care of. If you like this video, please like and subscribe, and if you want more details, you can reach out to us at www.grahamwealth.com.